Good morning. Welcome to the Brew. I am your host, Lex. Today we have two special guests with us, Amy Meissner and Tom Nunamaker from Aeromir. We're going to talk about something a little different. It's going to be an asymmetric iron condor in options trading. So we're going to break it all down, why, how, where, all the good stuff, right at the opening bell after this. We're with Tom and Amy of Aeromir. Tom, why don't you tell us a little bit about Aeromir and give us a little background on yourself?
Okay, Aeromir is a community for option traders primarily. We do have some futures guys in there, but it's mostly option traders. It's free to join. There's tools, guest speakers, trading groups, forums, all kinds of stuff. I started back in the day with shared mentoring, and Amy was a student and then educator with them. So we've known each other for 15 plus years. And Amy's was written up in the Stocks and Commodities magazine as the Queen of the Iron Condor years ago. But then Aeromir is a collection of not just Amy, but there's other experts with education services as well. As far as my personal background, I was an Air Force pilot, retired from active duty, and
thank you
now
for
I
your
live in
service.
Colorado.
Yeah, thank you.
Oh, thank you. It was a good career, and now I live 3 miles east of the Air Force Academy, so I see the Thunderbirds at the Academy graduation every year. It's fun.
I'm getting my pilot's license, so I'm in the middle of school at the moment.
Don't fly.
Let me know if you let me know if you have questions.
Oh, yep. I have questions.
Okay.
What's this do?
Whoa. Yeah, right. Yep. I'm on a Cirrus, so it's more over here. Yeah.
Okay.
Oh yeah.
All
yeah.
Right. Good. Amy, what about you?
Well, actually, I started my career in software engineering and multimedia development before the internet. So I'm really aging myself. And I kind of accidentally stumbled into options trading, starting with the Sheridan Mentoring Group and learning how to trade different types of option strategies there. That's where I met Tom and a few other good mentors. And I just had a really good knack for it, and I started teaching as people started seeing I was doing really well. And over the years, I've developed a number of different strategies that kind of suit my trading style, and apparently it suits a lot of people's trading style. And Tom has this wonderful community that he's built over at Aeromir. It used to be called Capital Discussions, now it's Aeromir, and asked me to come on board and teach different workshops, trade alert services, things like that. So I've been doing that for, quite a number of years. I think Aeromir started, like you said, 6 years ago. Can't believe it's been that long already. And then before that as well. But I've got, so several workshops. I've done video courses for SMB in the past, and lots of trade alert services, and I really enjoy it. And of course, that's what I do for a living. I trade options for a living, and I enjoy teaching people. So, so that's a little bit about me.
Oh, good.
And let's just repeat that: Queen of the Iron Condor.
Oh. That was a moniker given to me. That was a moniker given by Dan Sheridan, actually. And I think he's the first person who said that. And then when I had that article written by John Sarkett, I don't know how, I'm not sure if that's
Sarkett, yeah.
Sarkett. He wrote an article in the Stocks and Commodities magazine, and the title was, Amy, whatever, Queen of the Iron Condors.
Amazing. Oh my gosh.
That was a cartoon character on a giant prehistoric condor flying in or something. It was really, really funny.
We have the internal question at Tradier. Can an iron condor fly? Or can a condor?
Well, actually, that's a great question. And this particular one that we're going to talk about today can.
It can fly. I love it.
If it's asymmetrical, just one way, right, pilots?
No, actually, I've got it.
It goes in circles.
I've actually got it so that it can fly both ways.
Oh, I love it. I love it. Okay, well,
the trick.
Are you guys ready to get into it a little bit?
Sure.
Okay, so here's what I like to do. All different levels of folks will see this, right? So we have very beginners to very advanced, right? So what I like to do is let's just start out with just define for us what an iron condor is. for the more beginner group, what it means, that sort of thing, maybe a setup or something like that. So let's just tell the folks what that is first, and then we'll get into the little trickier version here that we're going to speak about. Is that okay?
Yeah, sure.
Okay, you want to take that, Amy?
Sure, I can take that. Or Tom, actually, this is you do a lot of that options 101 if you want to take it for the iron condor.
I can talk about it. Sure.
Go ahead.
Sure, go ahead.
Okay, so what is an iron condor? It's essentially a short put spread and a short call spread that offset each other. So it's a very popular trade for new option traders. Typically, they go very wide. They'll sell about a 5 to 10 delta on the short strikes and have an 80-90% probability of winning. The problem with iron condors is if the market moves a lot, then you get in trouble. So most of the time, the market doesn't move and it expires worthless. You get all your money, you're happy. Then you do it 4 or 5 times in a row. You think I'm quitting my job. I'm going to sell or mortgage my house. And then you put it all in the iron condor. Market makes a big move and you wipe out all your gains and then some in one trade. So it has risk. It's a very bad as far as the risk to reward ratio. But Amy's asymmetric iron condor addresses that, and it kind of solves some of the problems that a traditional iron condor would have.
Okay, that's good to know. So iron condor. So do you ever do the opposite side? So I think you described a short iron condor where you sell both call and put spread. Do you ever flip that baby around and look for the big move and do it the opposite way, or that's for rookies?
Well, most of the people are looking for income type of trade, so they're selling the condors. I did hear a good advice from a former market maker, said when you're learning, take any trade and take both sides of it and try to make money buying and selling it.
Yep.
And that's a good thought experiment.
Yeah, it sounded like it came from my mouth. I was a former market maker. That's why I'd say something like that. Interesting. Okay, good. So and then Amy, you came up with a little twist. So typically the iron condor, you sort of uniformly set it around the at the money, right? And I think you mentioned a 5 delta or something like that. Go ahead. I'm sorry, Amy.
Yeah, you try to, normally most people are, pretty adverse to big moves in the market. They're scared of most of the time they're scared of a big down move. Although the market tends to rise more often. And so they tend to go really far away out in the wings. And what it ends up happening is it has a kind of it makes people feel comfortable. It's super easy. The market will never get here kind of thing. And I'm collecting premium. But as Tom mentioned, it has the risk to reward ratio is, for every dollar that you make, there is a chance of losing possibly $10, unless you have a really narrow iron condor. So that's the risk of the iron condor. And I've traded those for many years, and I have something called the nested iron condor that's the one that they talked about in that article that I mentioned. And that was just because it was a very proactively managed condor. So it's a type of strategy that is best managed so that you don't ever end up having a large loss that takes out months of profit. Okay. And so with the asymmetrical iron condor, this particular strategy, and I've updated it recently for today's markets, is set up so that it's more like an unbalanced condor, but it has built-in hedge. So it takes the and I have a couple of a photo that might make a little bit more sense if you want to bring up a screen.
Let's bring that in to the screen if we can. Okay.
Great. So as you can see here on the right, that's what a typical iron condor looks like. So you've got you're sitting kind of in the middle. Your profit zone is in between the two sides, and you have a profit that you can make, but you have a much larger loss that you could lose. And to try to stay in that whole time to keep that whole credit is risky because the market could move at any time. Whereas on the left, you can see the asymmetric iron condor. This is the new version, the AIC 22. And I've got two different entry methods, but you can see like both the classic and the simplified method allows you to make that profit in a wide window as an iron condor can, but it has a built-in hedge as well as a risk management plan as the trade progresses to keep the you'll see that small line. I don't know if I can point. I guess I can't.
Yeah, you can. I think we can see that.
Okay.
Ollie, can you see that?
Yeah, great.
Yeah, so you can see here what we call the T+0 line. So that's today's line. So that's like a theoretical what the profit and loss would be if the market moves. And you can see on a typical iron condor, it's kind of like a tiny little ball on the top of a really steep hill. And if the market moves, you can lose a lot of money pretty quickly. And as that, for this one, as time goes on, this gets flatter and flatter, and you get more into the tent, but you have to wait a long time.
Yeah.
With the asymmetrical iron condor in the new version here, you can see that the T+0 line is much flatter. So even if the market makes a big move in either direction, you're not really feeling the effect of that as much. And then on top of it, there's a management plan where I will manage and adjust the trade as the market moves to make sure that it, stays out of trouble no matter what. And as a matter of fact, this particular strategy is set up in a way that even if the market crashes, the risk management plan is set up so that you can actually make a pretty large profit in a crash. So it's probably, the only type of, iron condor or condor style of trading where you can turn a crash into a profit. So that's kind of the way it works. And then the simplified method, as you can see up here on top, actually has no upside risk to the upside, but it forgoes a little bit of downside risk, but it still can make a profit in a crash as well. But as we know, as options traders, the markets tend to move up more often than they move down. So the setup has always been to make sure that because of the nature of the markets, unless I'm putting it on in a bear market, I want to have less risk to the upside or no risk to the upside. Okay.
So can we go through the setups in a second, or with this, how to create these, or no?
Actually, that's what I'm going to be teaching in a. I actually just launched the workshop. It's starting tomorrow.
Okay.
And I'm going to go over all of the details of how to set them up, how to manage them, step by step, going through trades step by step. I do have a few examples in this presentation to kind of show how it reacts to market moves.
Okay.
If you want to look at that, you want me to show that.
Yeah, go ahead, show that. And let me just ask a couple questions along the way here. So it sounds like this is a situation where we're not letting these things expire, go to expiration necessarily, right? So if we have some sort of profit ability of some sort, whatever your trade plan is or exit strategy is, are we taking these off before expiration or not really?
Yeah, these are taken off before expiration. I don't want to go into, certainly not usually they're taken off within 30 days. So it's a monthly campaign. So it's meant to be on and entered and not overlapping with other trades every month. So it's kind of like a monthly income strategy.
Okay, so a 30-day-ish, we look at a 30-day option, more or less.
It's more like we put it on, but with 40 to 50 days to expiration, but it's taken off with 2 weeks to go.
I got you.
And I never take it into expiration week because this particular type of strategy, I don't want it to have I don't want it to get into a situation where you have a more gamma risk for this particular strategy. I have other strategies where it doesn't matter and they're weekly strategies, but for this one, it's more suited as a monthly strategy. Got
it. So it's not our 0 DTE nirvana yet.
No, we do that stuff over at Aeromir as well as the weekly stuff. I have a strategy that's really popular called the A14, and that's a weekly trade. So a lot of people love those as short term, making money every week instead of every month. What's not to like?
Okay, got it. Okay, so you want to go back to the slide and show us another thing? Okay, let's do that, Max.
All right. So just as an example, here's the market's moving down. Maybe not a crash, but maybe a correction, right? Yeah. So here's the trade. It starts off. This is recent, August 2023. Yep. And as the market moves down, my, plan gets triggered and I might put in an adjustment. And as you can see here on the bottom of the screen, and this is the simplified method, so it's actually a little bit less smooth, but even with this method, I'm still, not really losing a lot of money. And the market might continue to go down and I might make some other adjustments. And you can see here, the market is down like 2%. This is the SPX. So it's down about 2% since entry. And that's only in a few days, maybe a week or so, or week and a half. And as you can see, it's just, we're under the tent, which is where we want to be because that's where the theta is going to start coming in. But it's not really I'm not in a panic mode. If this was an iron condor, I might have been, on that hill down here thinking, what should I do? So, and then again, it continues to move down. So now we're here 18 days in the trade, and the SPX has been down, about 3.5% at this point, 142 points. And still, it's not losing any more money than it really did when it was up here. So, so the setup, the entry, as well as the management of this strategy is what keeps it kind of out of trouble. And then if the market kind of comes back up, it starts to really start to make money, and you can exit out. And I don't try to stay in these things for too long. There are people that like to, try to stay under the tent for a long time. I try to take my profit off within the 30 days and just move on to the next trade.
Okay. And is there a defined profit level, X
Yes, there is. So yeah. So basically I do have a slide, and then I wanted to show you a crash one, but I do have a slide here.
Okay.
Here we go. Planned capital.
Okay.
So for the full size asymmetrical iron condor, the planned capital is about $18,000. So I always put in a little buffer for an account size. And there's the two different methods that I mentioned, the simplified and the classic. And for the simplified entry, there's no upside risk. You're just collecting a nice credit.
Sure.
And so I just have that as a percentage target of trying to keep at least 50% of the credit. The classic entry, which is a little bit more easy on some people for, that are always worried about the downside. I'd go for like 6 to 7% of the margin. So 6 to 7% of the 18,000, or, times however many units that you have on.
Right.
And then if there are multiple adjustments, sometimes we'll take money out of the trade. So I'll lower my margin target.
Okay.
But the losses are generally kept lower than the profits. So with a win rate of like 85+%, the equity curve is pretty smooth.
Right.
This is a 6-year test from 2018 to 2023.
Right.
But even when I was trading it live, like when I first developed it, I did some testing, and then I started trading it live in 2013. And you can see the results are about the same as the with commissions and slippage and everything. But just to give you an idea of how resilient it can be on a down move, everybody likes to see, like, what would have happened, like, what during COVID, right? Which is a pretty recent memory experience that a lot of people had. And so obviously this is in the rut. So this can be traded in the SPX or the rut. It could be traded in other things. Those are the two indices that I prefer.
Any advantage, sorry to interrupt, any advantage to trading the cash settled indices? Or are we worried about assignment risk at all?
It's not about assignment risk. I mean, I'm closing it with 14 days to expiration. It's more about just, by being in an index or, futures of an index, you're kind of smoothing out. You don't have to worry about earnings. You don't have to worry about any other announcements or any sector issues with certain sectors. In addition, as you know, in the US, and I'm not a tax accountant, so, obviously.
Section 1256.
Yep.
Yeah, you have Section 1256. So you can be, whereas if you're trading stock options or stocks and you hold them for less than a year, you get hit with ordinary income taxes.
Right.
If you're trading, if you hold them for longer than a year, then you have that 60-40 split where only 40% is ordinary income and 60% is tax at capital gains, which here in the US is very beneficial. With an index or a future and options on those, you have the ability to get that same tax treatment, at least as of today, as I'm talking, with even if you're in it for a minute. So you don't have to hold it for a year. So that's the big benefit. And then the other benefit, of course, is just you don't have to worry about earnings or sector announcements or things like that.
Okay.
And then so here's the March COVID crash, and as you can see, here's the classic method, and it's pretty smooth to begin with. And let's just continue. So the very next day, we're down 4.5% in the rut. So this is in the rut. So it's down 4.5%, 65 points. And as you can see, we're like, it's just not really hurting the trade at all. Now, granted, we have a pretty decent amount of room on both sides when I entered it, but that's the nature of the entry of the trade anyway. So as we continue here, let's see, how many days is that? This is like Friday, I think. The following Monday, so this is just like, in the trade for a couple of days, we're down another, we're down 8.3%. 120 points in the red is 8.3%. And you're getting close to that left side of the tent. But even with that, you're still not really hurting that much.
Right.
That's kind of what I meant by it's very resilient. Even in a fast moving market, which, as you know, when it's this fast, we also get that volatility pop. And this is it starts off as a negative vega, but as I manage it in these situations when the market's going down, it becomes a positive vega trade. So it stops hurting at that point. Whereas an iron condor, you would be really in trouble. And let's just continue. So I do have a couple of tactics that I use if we get into a situation where we're getting close to to this area where you can get hurt and have a lot of losses. I want to protect that. And if the market continues to go down, I have the capability of making a profit. If the market goes up, it's looking like negative theta, but because everything is in the same expiration cycle under this tent, everything's in the same expiration cycle. There's, you can't lose over here, right? So it's only the downside that you're worried about at this point. And in this particular case, yes, the market continued down. Actually, the RET was down a total of 22% since the trade entry. And this is like, I don't know, I think we started it on the 5th and this is on the 12th. So 7 days, we went down 22% in the Russell 2000. And because of this, the way this trade is managed, not only were the losses kept small when they was showing a loss, but also in this case, it was able to make a profit even during a crash. So that's kind of the benefit of this strategy, is that it can handle, a rally, it can handle a crash, it can handle the market going sideways, getting choppy or whatever. And for those that I like the simplified method where it's a little bit more bullish, I went through the same process, and even crashing here, it starts to turn into a positive vega trade, and it had the same outcome.
Okay, got it. So
anyway,
without giving away the secret sauce here, because we want people to come to the webinar and pay some money to this, are you able to tell us, is it 4 legs in this asymmetric iron condor? Are you able to kind of give us shed some light on that? Is there an extra unit?
Well, an unbalanced condor is 4 legs like a regular condor, but I have a few extra pieces that I put on depending on if it's the classic method or the new simplified method. It's still very simple, but the big secret sauce is, I guess, in the just managing it, being more proactive and putting on, making certain adjustments when certain things happen. And it's a rules based, or like, it has certain guidelines that if this happens, this is what you do.
Right.
And if you kind of stick within those guidelines, it tends to work out, 85 to 90% of the time. And you can turn a crash into a profit. It doesn't always work that way, but the main thing is that you're leaving, you're keeping the losses small. And you're trying to keep the losses smaller than the wins. And that's what gives it this nice, growth chart.
Sure.
Whereas with an iron condor, if you do take a loss, and if you're not careful, that those losses are generally larger than the wins, and they can kind of wipe out several wins in a row.
Right.
And so that's kind of what this was developed to combat, is to, okay, well, how can we create something that's still very simple that people like to trade, but make it much more resilient for the markets moving around and not having those big hits on your account.
Okay. And then you mentioned earlier that your loss stop out in your head, whether it's in your head or systematic, is you never go more than the credit you received, right?
For the simplified method, I would never go more than the credit I received. And for the classic method, it's generally, just because of the nature of the management, you probably won't have anything more than a 7%, unless you don't do anything. But if you follow the guidelines, the losses aren't going to be lower than 7%. I think I have like some statistics here, where you can see that the average wins and the average losses are pretty close.
Yeah, let's go back to this slide.
This one? Oh, which one?
Yeah, we have to show it. We have to share it. Go ahead.
Is this one?
No, you're good. Max has to share the slide. That's all.
Oh, I'm sorry. Which one did you want me to
Okay, go ahead. Sorry.
Okay.
Now, go back again and tell me what you just said. And point.
Oh, this one.
Yeah.
I'm sorry. Yeah. So as you can see here, this is over 6 years, and the average win is a little bit higher than the average loss.
Mhm.
And the largest win and largest loss are pretty close.
Yep.
But you can see with 33% max consecutive wins and only 2 max consecutive losses, and these types of ratios, that's what gives it this nice smooth growth chart over time. So as opposed to something that might be, I think I might have it. No, I don't have anything like that in here. As opposed to some strategies where you might end up making money over time, but in the you're kind of chopping up and down over time, and it's just a little bit more stressful, I should say, I guess.
Okay. Cool. All right, I like it. I think I remember you said your profit target is 50% of max profit, 50 to 90, I think.
On the simplified method, since there's no upside risk.
Yep.
Like if you had like a big move, like a big gap up or something like that, the target is 50%, but you could try to go for, could get up to 90%.
Okay.
When I do my testing and my trading, I just look for a 50% target. So if we have a big gap up and it gets over that, great. If it hits 50%, I'm probably just going to close it out. So I'm just kind of trying to keep it within a certain guideline so that I'm not ending up getting whiplashed back and forth.
Sure. Got it.
And but the nice thing is with the simplified method is that, if you're in a bull market, or even in a crash where you have these, a lot of times you'll have these reversals, you can get out of a trade like, the same day or the next day. If we have a big enough move, and it doesn't even have to be that big of a move. Whereas the classic entry is much more smooth, especially to the downside, but it's not, the simplified method is still pretty smooth to the downside. This one's just a little bit more, but you have a little bit more to manage, and you have to wait longer to take your profits.
Okay, great.
On that one.
Nice. And these are the things that your members will learn, right? If they sign up for Aeromir and your service. Is that right?
Yeah, we have, I think this class is starting tomorrow.
Okay.
So what we do is I'll do, live sessions so that people can ask questions and I answer the questions. And then if people want to join now, which is the best time to do is live, we have discounts. And then if, they miss out and don't get a chance to join it live, they can still sign up and watch the recordings. And we have a website link or whatever if you want to share that as well for the upcoming class if anybody's interested.
Yep, that's awesome. And then Tom, you said that you don't charge for Aeromir. Did I hear that correctly at the beginning?
Right. It's a free community, so people can sign up and get access to our weekly trading groups, forums, tools, all that stuff, guest speakers. And then if they want to pay for a gold membership, that gives them full access to the library. They can download files. And then there's experts like Amy that have trade alert services, classes, workshops that they can also get. But that's not required.
Right.
The community is free.
Okay. But getting to the high, understanding what this asymmetric iron condor is and all the minutia, you have to pay for that part of it, I'm assuming.
That one's a paid workshop, right?
Yep. Got it. Okay. See, Molly, you can't get anything for free, Molly. You hear me?
I was going to work it. I was going to work it in about a hot 5 minutes, but
you were going to work it hot 5 minutes.
Yeah.
Put a condor on with a long put, and you're kind of in the ballpark, right?
There you go.
I'm sure you could figure it out.
I was going to work the dog angle. My dog's behind me. There's one behind you too on a painting. So.
Yeah, he's just down.
All right. Well, good.
Amy's into dog competitions with agility.
Oh, geez.
Oh, wow. Really?
Molly's in the surf competitions with agility.
Right. I don't know about agility. I wouldn't say agility. It's more drowning.
Or not drowning.
Or not drowning.
Try not to drown.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be accurate actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.